It's Ask Me Anything Friday. So whatever's on your mind, let's do it. Philip Doyle says, it's 9:05 a.m. in Ireland, and I'm still not first. Came here to hit the notify me button. And I see there's one person waiting already. Chris, you're worth the wait. Awesome content. Philip Doyle, my friend, you, sir, are worth the content. You are why I do this. I'm so glad that you tried to get here at 9:05 a.m. and to do that. It says 3:05 a.m. on my side, so outstanding work. Shoy, what's up? I'm waiting for my invitation to Outlier U. You need a student who doesn't follow the rules, makes all the mistakes, doesn't know squat. It's a challenge. Shoy, I'm sorry. All the spots for the alpha group are already filled, but you're going to be able to learn everything anyway. So, like, there's no paywall. There's nothing to hold back. I'm giving it all on the internet for free. Oh, that sounds all right. Speaking of giving it all on the internet for free, I didn't even realize, Albertone pointed it out, we've market cycled already. Now, it's been a short market cycle on the full stocks. Let me go over here real quick. We market cycled quick. I was surprised. So I may be putting on trades today. I may be putting on trades today. Right? We technically market cycled. That's what he pointed out in the Discord. I didn't even realize that we did it. So I like this. This gets me excited. But what I want to do is I'm going to work on this today just to confirm how I feel about it. Because inside of the breadth for each of the sectors looks very similar to this, where they peaked, pulled back down, but only the energy sector actually pulled under the 10 EMA and pushed back up. So if I go to my rules, the breadth of the market is what I'm looking for to pull back up, right? And then if we go to the sector, same thought here. But I mean, it was a small dip, but it definitely was a dip. So I'm considering putting on trades today. If they're going up, clearly. If they're going down, then I'm not interested because the market is going back up. So I'm considering it today. Now, what I did was I pulled all of yesterday's and today's signals that passed my screener. Here's my screener criteria real quick. Take a screenshot in 3, 2, 1. Okay, moving on. And there's a whole bunch. So I just started going through these, looking for a couple things like any order blocks in our way or any earnings the next couple of days. There's a chance I could be putting on a lot of trades today. So like PVH right here, like this one's got an order block in the way, so I would mark it red. I'm not going to come back to that. QDEL, Roblox. So if earnings happen this morning, Thursday, May 8th, or after the close, I'm fine with that. I don't care. I don't care. As long as I'm not trading at earnings, that's what I care about. So like this one I wouldn't take. So let me go through this with real quick. I'll go through this list real quick, highlight the ones that I'm interested in, highlight the ones I'm not interested in. Because the only thing I'm looking for is how much space do I have between where we're at and that order block coming up. Generally, I like 2 to 3%. This one is how much? Oh, it's 5%? I thought it was more or less than that. Yeah, I like 5%. Oh, wait a minute. Did I mark that when I said I like 5%? Hang on. Yeah, there we go. Okay, this one shouldn't be on there, so definitely not looking at that one. So this one's got earnings on Wednesday. A little too close for me, plus an order block, so I wouldn't take that one. The hood. Remove my drawings on here. How much space is that? 7%? That looks good. Well, it's on top of an order block. I'm fine with that. Okay, so we got quite a few, like a lot. So your question is probably, well, if you have so many to choose from, like this is a big list, where do you start? So I start looking at where's my highest return and the way down. right? So for example, like Docs at 158% or Roblox at 400, or Rocket Lab. I always think it's Roblox. Rocket Lab at 450%. Would that one work? Let me organize by there. Yeah, I could be very interested in Rocket Lab. Does Rocket Lab have options? Yeah, Rocket Lab has lots of options. Let me change my expiration date. Isn't this fun? You get to look over my shoulder. Okay, so between 7 days out or 42 days out, I would definitely go more 42 days out. What about pricing on those? Ah, this is a really expensive one, isn't it? Option prices are crazy expensive on this. But let's go like the 80 delta. Here, 105 over 540. Yeah, that'd work. Just a $19 stock having options that are $5.40 is crazy talk, but that's 42 days out. So in that case, what I would do, look at this. We're learning as we go. I'm just talking through it. Expirations. I would go all expirations. Then I would start at the 21 day. Look at the liquidity here. I don't love that liquidity. It's really not quite enough for me. So I'd go one closer. Look for the 80 delta. Yeah, that looks really good to me. The 20 strike, 14 days out, 282 open interest at 78 delta, 67 cents over 435. So 67 divided by 435, 15%. No, what did I do wrong? 60. Hang on. Fingers are clicking faster than I want to. 67 divided by 435. 15%. Yeah, I would take that. I would take that. I would take that on not Roblox, on Rocket Lab. Right. And then I would set it up. I'd say, okay, here's where I get in. Actually, I made a little indicator for this. Bullish ATR levels. There we go. So I'd say this is where I get in. Now, I'm not taking this trade yet. I only trade at the end of the day. But this is what I would be thinking. Here's +1 ATR. Come on. I will tell you, Trading Lab, this is Trading Lab, Trading View is not as simple on little drawing templates as TrendSpider was. TrendSpider actually had a lot better templates. There we go. And then something like that. Then I would turn this indicator off. Oh, I put the wrong one there. Either way, that would be an interesting point for me. Now that gives me 60 cents. How far is that? From the opening to here. About 3%. 3% on Rocket Lab to find out if it's going to work or not, right? And then I would get my position size. I think we are learning together, and I haven't even started teaching yet. Rocket Lab. Rocket Lab. Taking my portfolio to the moon. My family can attest that I walk around all day, every day, singing about what's going on in life. I'm not saying that I sing well. I'm saying that I enjoy myself singing. In fact, I remember when I was a kid doing the dishes at my parents' house, just singing about doing the dishes, doing the dishes. There we go. Okay, so Rocket Lab, ATR of $1.20. If these were your inputs over here, an option price of 377. Oh, that's mid price. It'll tighten up while the market's open. So let's actually change that to 435. I would put roughly 11% of my portfolio on in Rocket Lab to make that trade happen. Now you're probably like, dang, that's a big size. Yeah, it is on purpose, right? When you find an opportunity, you want to go big. You want to go big. That way you maximize your gains. But here's the thing. I know exactly where I'm going to get out. If I'm wrong, I'm going to have 3% on the stock to find out. 3%. 74 cents, give or take. Right? Yeah. 74 cents, give or take, to find out if I am wrong. If I am, that's okay. I move on. How much do I risk? in this example right here, give or take 1250. I will survive. But if I'm right, to the moon. You know what I mean? Y'all catching that? You picking up what I'm putting down. All right. Now that I'm excited, let me scroll through the chat because I want to make sure I get to all of y'all's questions today. Because today is Ask Me Anything Friday. But I have to make sure. I do it right. Because here's the deal. I love doing this for the live streams. There's 250 people watching right now, which is crazy. Most of my live streams get around 1,000 views by the time the live stream is over, which boggles my mind. I used to get 20. January 5th, I would get 20. January 6th, I get like 1,000. A lot changed really quickly. But YouTube doesn't promote the live streams. So that's why we edit them and then we repost them later. And YouTube gives literally 10, 20 times the impressions on the replay versus on the live stream. I don't know why. It just does. So I do have to kick that off with a hook. Otherwise, all you normal people who now have become outliers will turn this off. But I have to entice you in. I have to play the YouTube game. I do want to answer Luke's question right here. I'm a new outlier now. Cheers. Everybody say cheers to Luke in the chat. I'll even say cheers to Luke. Cheers to Luke. Cheers to Luke in the chat. Can you explain when to take profit for a trade any simpler? I'm new, but addicted to learn this. Thank you very much. No, Luke, you're the best. Okay. So I'll show you my profit rules. Well, not profit rules, but my exit rules, right? We don't know how much we're going to make on a trade. All we know is we have a plan to get out when one of the exit signals happens. Mine are going to be different than yours, and that's okay. That's going to be different between you and I, and that's okay. Right? Remember, when you put on a trade, there are no expectations on the outcome of the trade. I have no profit targets. I'm just going to get out when something on this list happens. So let's use Rocket Lab as an example. So if we go to Rocket Lab, I haven't even started the AMA. I haven't even started yet. I just love doing this with you guys. This is my jam. Okay, I hope you picked up on that. This is my thing. So first off, we got a buy signal today, May 9th. Now, I would follow the 10 EMA as my trailing stop, meaning as price continues to move up, I'm going to let it move up. Let's look on the other side of the chart. I'm going to let it move up while it goes, right? I'm going to let it move up, and I won't close it until it closes underneath the 10 EMA, like right here. This is why I would call it a red light, okay? And so you can run, this would be a green light here. You can run a simple trend following strategy, just like this. One close over the 10 EMA, one close under the 10 EMA, and that was how much? 105%. Oh my gosh, my options would be up 1,000% at that point. That would be freaking sweet. But we don't know. We don't know. We have no idea when we put the trade on where it's going to get out, okay? So we need to make sure we're following the plan, because if we say, bro, I just bought this stock and it's going to go up 105% in 21 days. I am going to be swimming in my gold coins just like Scrooge McDuck. That is the fastest way to lose everything. Planning on enjoying your profits before anything has happened is the fastest way to blow up your account. You're probably thinking, wait, what? The reason being is because you're anchoring yourself to this outcome. And if this outcome never comes, right? Let's imagine that this was your green light here. And you said, oh, it has to go up. It should go up 105%, right? It should go up 105%. And then it didn't go up at all. In fact, it went down. It went down for ages. And it's just now starting to turn back up. That is the fastest way to blow up your account, by anchoring yourself to the outcome. Now, when you stop anchoring yourself to the outcome and just trade on what the market is giving you, that is when you can be successful. So I would let the 10 EMA be my trailing stop. I would let the half of an ATR from entry be my stop loss, right? So let's forget about how much profit taking we're going to take. Let's focus on how little risk we're going to take. Real brain shift, right? Let's stop focusing on how much profit we can make. Start focusing on how much risk we're willing to take. Opposite ends of the spectrum. But focusing on how much risk you're willing to take will keep you in the game when you have absolutely lost your mind thinking everything you do is going to turn into gold. Now, look, this is not you in particular. This is just an education lesson right here. So here, I'm willing to take, 50, 60 cents of risk. That's it. That's it. If it works, great. If it doesn't, it doesn't. That's fine. So that's my half ATR entry from stop loss. Now, if it runs into any order blocks, I get out. I don't see any order blocks in the way. I'm good for that. In fact, no, I don't see any overhead order blocks. That's cool. The Outlier heat map, if it stalls. Now let's take a look at what the Outlier heat map is. So inside of Outlier, part of the OVTLYR Nine, which we'll talk about more and more and more, you'll get used to that. Part of the OVTLYR Nine is knowing how much fear and greed is going up in the stock and fear and greed is going up in the sector. So looking at Rocket Lab, we can see the sector is definitely growing. The sector breadth bottomed and is now going back up, which is exactly what I want to see. And then if we look on the stock itself, there's still a little bit of fear. Now, I've had people come on and they're like, Chris, what are you talking about? You're nowhere close to Warren Buffett. Granted, I'm not 904 years old. You're right. But when I say be fearful when others are greedy and greedy when others are fearful, I find that slide right here. Right. We're trying to get in as the market cycle is moving up. The market cycle, meaning how many people are buying versus how many people are selling and getting more fearful and more greedy. Right. We're trying to get here as it's moving up versus over here while it's moving down. Right? This is the momentum that you want behind you. This is more and more people screaming buy, helping you, versus more and more people screaming sell, working against you. So we can see that on the breadth. We can see that in the sector. We can see the stock is a little bit of fearful. However, it bottomed at 40 and is now up. So it went from 40.04 to 40.54 today. So that means it bottomed. I don't know for how many days, but it's bottomed right now. So when it says stall on my exit rules, it says stall on my exit rules, Outlier heat map stall. That means the value of the heat map is no longer going up. It either is the same value or starts going down. So for right here, it's about half a point higher than it was yesterday. That's what you want to see. Now, when you're in a strong trend, this goes fast. This goes really fast. Let's go over here. When you're in a strong trend, it'll go from like 81, 84, 87, 89, 92, 93, 97, right? So within like 5 candles, it went from 81 to 97, maybe 8 candles. Whereas right now, on this change in direction, the fear and greed is bottoming and starting to turn. Bottoming and starting to turn. So that's my exit plan over here. Now, once we roll the options, I do a little bit differently. But over here, this is something that I found really, really interesting. This may, in Outlier 3.0, this may need some refinement. I'll be the first to say that. It may need some refinement, but what I found was really interesting. So if a stock was between 0 to 50 on the heat map over here, so 0 to 50 meaning any sort of fear, what I found was I went and I looked through every buy and sell signal. And what I found was where was the peak price versus where was the peak heat map. So I ran the average on peak price and peak heat map, and I found the average peak of the price matched G63. I'm sorry, 63 out of 100. So 63 out of 100 would be my exit point if nothing else was hit. If nothing else was hit as it's running up the heat map. And then if it's anywhere from 50 to 75 when I get in, right? So let's scoot over a little bit. Anywhere from 50 to 75 when I got in, somewhere like this, right? 63, 62, whatever. I would give it a 10-point spread. Now, why would I only give it a 10-point spread? Because what I have seen, what I found, what I've observed, what I've pointed out all the time is that when you see peaks on the heat map, you can see huge contractions very quickly. Now, it went sideways here, but you can see how this was like 90. This literally is the highest we could do, 99.74 on one of these. Crazy high. and then the greed just evaporated and it went sideways for a while. A lot of times when you see a peak like this, it can actually snap back, right? So here's one on the opposite side. It went down to 19, 16, as low as 15, and then fear started to snap back, and you can see right here it went sideways. Okay, we're not trying to hit the peak, we're trying to let it run with us. We're trying to ride the wave. So when I see this, the further it goes in any direction, the less room I want to give it, right? It's like a rubber band. The further it's stretched, the more likely it is to snap back and snap back hard, right? Just like here on the market cycle. I'm gonna have to make more of these slides to put, so I don't have to scroll all the way to the bottom every time. Just like the market cycle right here. The further it gets stretched, the more likely it is to snap back. Right? And we're not trying to do that. We're not trying to catch the top. We're not trying to catch the bottom. We're trying to catch the 80% in between, because that's where the money's made. So those would be my exit rules. And then lastly was here, a 5-point spread when it's over 75. So for example, if I got a buy signal and it's already up at like the 99's too high, I wouldn't do anything over 90. But let's say it's a buy signal. In fact, there, right there, November 6th was a buy signal where it was at 87. So I would give that 5 points to go from 87 to 92. So it go from, let's even measure this out. It would go from here, and then it went up to 92 on this date here. So that was a 13% move. That was, come on, click for me. It's not clicking for me. That was a 13% move, 12% move in the span of just a handful of days. This should work. Let's see. I don't know if that worked. Oh yeah, it did. I was just off a little bit. There. So it was a 13%, 12% move in the span from 84, 87, 89, actually right there. So it was on 84 to 89. So a 4% move. I'll still take a 4% move, a 3.5% move, right? Especially when it's that high on the greed. I don't give it a lot of room to run. So that's what I would do. Oh my gosh, we're 25 minutes deep and I've only answered one question. Let me go the next one here. Greetings, Ben. Good to see you. Okay, like I say, today is Ask Me Anything Friday. I don't have any questions lined up. So what I'm going to try to do is just scroll through here and pick out some questions that I can help you out with. I'm trying to pick out as many as I can. Okay, how did you pick Roblox? Or it's not Roblox. It's Rocket Lab. It looks all crossed up. Cool. Let's do this. All right. This is gonna be great. I can use this as a good hook. I appreciate that. I appreciate that question here. How did I pick Rocket Lab? Just a moment here. Let me go to my screener. Pop open my screener. There's Rocket Lab. Okay. So I'm going to use that as a hook. I appreciate that. Rocket Lab looks like it could be rocketing up to the moon. Let me show you exactly what I'm seeing out on my charts and inside of Outlier to make me think, hey, you know what? There's a great chance that Rocket Lab could be the next rocket ship. If you're ready for that, let's go. So first, I ran the screener inside of Outlier. Now, these are my criterias right here. I'm pretty much open to all sectors and indexes, but I only want a positive return, meaning we have positive expectancy following these stocks. Now, I'm also looking at greater than 1 million shares, average daily volume, the current buy signal in Outlier, and all market caps. I'm fine with that, but I'd like to go more than $20. I'm a snob, so I want my minimum price of a stock to be $20. Then I want to see the fear and greed heat map to be from 0 to 90. If it's too high, then I'm not interested. That's when I start to get a little bit nervous, is when that fear and greed value gets really high. Next, I want to see the heat map of the fear and greed. I want to see it moving up. I don't want to see it going down. I don't want to see no change. I want to see the greed coming back in. And then the overlay indicator, that is showing us what the market trend is doing for that stock, right? So the 10 over the 20, price over the 50. So when I ran this, I looked at lots of different names and Rocket Lab poked out to me. So taking a look at Rocket Lab right here. Let's look at it from the framework of our new Outlier 9. I'm telling you, you run your trades through the framework of Outlier 9, it will change your life. So what is Outlier 9? So first, we start with the market, with the trend, the signal, and the breadth. So let's go look at the market first. So the market itself, the trend of the market, actually, let me do this. Let me go to SPY here. I'll just type SPY right here. What's great about this is at a glance, you can see that the market's trending up. You can see the market's trending up. How do we see that? Well, with the green overlay right there. And that tells you when the 10 EMA is over the 20 EMA and price is over the 50 EMA. So we can see that. That looks great. So we can see right now that we have a bullish trend going on in the market. Next, the market signal. Is it a buy signal or sell signal on the market? We got a buy signal on April 25th. That makes it easy. Market breadth. Now, this actually changed today, Friday. I didn't realize it. One of our outliers told me it did. And so I took a look at it and he's totally right. Market breadth has cycled. Now, it's still really high. It's still really high, but the market breadth peaked under the 10 EMA and has actually gone back up. And that's what we want to see. We want to see the cycle right here. So this is now green to me. This is now green to me. I like this. Shape fill, make it green. Now let's look at the sector. The fear and greed for the sector, if we go here on Rocket Lab, zoom in, and we can see the bottom was at, on the sector, right? You can see it's getting less fearful and more greedy. That's exactly what we want to see. Exactly what we want to see for the sector. So we're going to mark that green. And then the breadth for the sector. We can see the breadth peaked, came back down, has bottomed, and is now going back up, which is exactly what I want to see. Exactly what I want to see. So market breadth for the sector, I would consider that green as well. Next, the stock itself. We've already established that it's in a rising trend just by looking at the overlay back here. It makes it so simple. So that is definitely in a bullish trend. Next, the signal. We got a signal today for a buy signal on Rocket Lab on Friday. So that looks great. And then the fear and greed. So the fear and greed on Rocket Lab, it was coming down, getting more fearful. However, it hit a bottom and is starting to move back up. We can see it went from a bottom of 40.04. Now today it's at 40.54. That's exactly what we want to see, where it's starting to move up. So I'm going to mark that green. And then lastly, double checking if there's any order blocks or earnings out in our way. And it's already had earnings. It's already had earnings. Let me remove my notes here. Remove 10 drawings. It's already had earnings last night after the close. So this morning, I'm not even worried about it. The earnings information has already happened. I would be looking to put on the trade at the end of the day because I don't know if today, if the market's going to like earnings and it's going to go down and then close maybe under some of these moving averages, or I don't know if market's going to hate or love earnings and it's going to just rocket ship up higher. Rocket Lab, rocket ship. I don't know. So I'm going to let the market tell me during the day. And then I'll be looking to get in at the end of the day because I'll tell you what, Rocket Lab just filled in all 9 of the Outlier 9. So that is the way that I want you to start looking at your trades. Starting today, I want you to start looking at the Outlier 9, the market, the trend, the signal, the breadth, the sector, the fear and greed, and the breadth. And then finally, the stock itself, the trend, the signal, the fear and greed, and the order blocks. Now, it's a lot, right? It's a lot. But this is the greatest game in the world, right? You can't just show up and play Zelda without having known all the rules. These are your rules. You follow these rules right here. It doesn't guarantee you're going to have a great outcome, but it does guarantee that you will be in the right direction of the momentum of the stock and of the market. So let me know if that is helping you. Let me know in the chat. So let's do this. Today is Ask Me Anything Friday. So I want to go through and find a few of the, I want to find a few questions that people have asked and answer these live. So Joe is going to be one of our Outlier University students. Cheers to Joe. Outlier 9 suggestion, switch positions to the market trend and SPY signal. Outlier software makes the master key and this was visually represented. Cool. I'll take a look at that in a little bit. Anthony wants to look at hymns. All right, Anthony, let's go through the Outlier 9 process for hymns, right? So let's start. So first off, this is not going to change for hymns. This is going to be exactly the same because it's the market. From a top-down approach, this is the market. trend, signal, breadth is going to be the same. So let's type in HIMS and go look at the sector. Let's go look at the sector for HIMS. So zooming in on here, we can see right now that the sector actually has peaked in fear and greed and is coming back down. So the sector is showing less greed, a little bit more fear. The sector as well is showing bearish breadth right here because we do have the 10 EMA crossed over the breadth value itself. So that actually doesn't make it really great to me. That gives me a little bit of concern. So we're going to mark these red because both of these are somewhat bearish. Next, let's go to the stock itself. So first on the stock, we're going to look for the trend. We can see here with the green overlay, the 10, 20, 50 is all pointing north. So we know it's in a bullish trend. Easy. Now let's look at the signal. Oh, don't need to do that, do I? Let's look at the signal. The signal has a buy signal. The buy signal came on April 29th. So that's green as well. In fact, let's go mark HIMS on the chart with HIMS for April 29th here. So it's still sitting on a buy signal. If you had bought it at the close on that date to today, where I'm seeing it right now, that would have been a 47% gain. Okay, a 47% gain just from this buy signal right here. Now, a couple things to keep in mind. The breadth was bullish at that time. The fear and greed for the sector was bullish at that time. The fear and greed for the stock was bullish at that time. The crossover happened a day later. The overlay happened a day later. This is what you need to think about, right? The entry signal really was at that point, not necessarily at this point today, but that's okay. Maybe you're already running it. So fear and greed for today is going up. That's what we want to see. And then lastly, any order blocks on top of HIMS? I don't remember seeing any. No, not at all. So on the date that the buy signal came through, I would have rated this a strong buy. Strong buy. Today, we have how many? We have 7 out of 9 that are still bullish. So I would rate this somewhat of a weak buy. 7 out of 9, somewhat of a weak buy. So isn't that cool? You can now, with just a moment, just like 90 seconds, you can go through, hit all these data points, and you can say, okay, does it match everything I need to see in the Outlier 9? If yes, that's a strong buy. If it doesn't meet everything, maybe 7 out of 9, you could consider that a weak buy. If it's somewhere like 4 or 5 out of 9, you could consider that a neutral, right? Maybe a hold. If you see maybe 3 out of 9, yeah, that's definitely going into the sell camp. And 2 out of 9 or anything less than that, that's a strong sell all day. So for HIMS, I would put this into the weak buy category. Now, doesn't this make it easy to quantify objectively? No emotions, no biases, just looking at the stock, evaluating the market, the sector, and the stock itself to know, hey, you know what? This actually does look pretty good. Now, no guarantee on the outcome, but at least you're following a plan to know when it's working for you. Sorry, I made Mikey Mike spill his coffee all over the place. You're welcome. Okay, let me see. Continue on here. Some more questions. Richard Solal. I'm Texas. I'm Texan, so it's gonna be Solal. Solal? Either way, Richard. Nobody can pronounce my last name, so I get it, bro. Good morning. Energy seems to have more potential to grow, or is this an assumption of mine? Do you try to pick stocks based on first on sector performance? Your thoughts on RRC and AR long. So here's the deal. All I'm looking for is Outlier 9. If Outlier 9 is lined up, that tells me the performance is there in the market, right? But then if there are cracks, right? If there are cracks in the Outlier 9, I'm not interested. I'm not interested because I only want to take a trade where all Outlier 9 is lined up. But you can say, I'll take 8 out of 9, 7 out of 9, 6 out of 9. That's up to you to figure out. So let's take a look at RRC, and we'll run the Outlier 9 for RRC. If I can type correctly. Let's try that again. RRC. Okay. So the market is not going to change. Trend signal, breadth are still all green. And if we look at RRC, it had a buy signal on April 29th. The sector is getting less fearful, and the sector breadth actually crossed under and is crossed back up. So the sector, fear and greed, and breadth both look really good to me. Both look green to me. Next, let's go to the stock. So the stock does have the 10, 20, 50 crossover. So the green overlay makes it super simple. The outlier trend template within a moment's notice. The signal is a buy signal, like I said right here, April 29th. The fear and greed is moving less fearful. That's what we want to see. And then the order blocks for RRC. There is an order block, but it's way up here. I like 2 to 3%. If I can get 2 to 3%, I'm interested. This one is 8% away. Dude, remove one drawing. RRC lights up the full gambit. The full gambit of the Outlier 9. So that would be a strong buy to me. That would be a strong buy to me. Isn't this handy? Oh my gosh. It's like, wait a minute. I can look, like, how long did that take me? Maybe 90 seconds because I was talking through it. And now Richard knows, hey, you know what? The Outlier 9 is lit up. Does that mean I'm going to win? No. But that does mean you have everything you could possibly have working for you on RRC. And this is why I want to stress this, right? So many YouTubers will come in and they'll sell you pipe dreams that you're going to be a millionaire. $75 in this one stock and you'll be a millionaire. I'm sorry, I have the truth to speak to you. I don't know what's going to happen with RRC. The outcome is yet to be determined. I'll tell you what, right now, the Outlier 9 is lit up for it. That's what you want to see. I'm not gonna blow smoke up your backside. Not gonna blow smoke up your backside. Let's see, Steve. I got out of Relics when it got into the 80s and it snapped the day I got out. After I got out. Outstanding. So what he's talking about here is the fear and greed. So let's go look at RelX. He's talking about the fear and greed snapping up or down. Ooh, perfect, Steve. Thank you so much for showing us this. All right, cool. So let's look at this on April 15th, okay? So we're going to look at it from the context of April 15th, okay? So on April 15th, the market, I don't know if the market was all set up then, but we'll assume that it was because I really just want to focus on this one page here. The fear and greed for the sector moving up, right? The fear was moving out of the sector. That's what we want to see. Next, the breadth for the sector was crossed up. That's what we want to see, a bullish breadth. Next, the stock's trend. We can see it was green, meaning the 10, 20, 50 outlier trend template was already pointing up. Perfect. The signal got a buy signal on that day on April 15th. Next, the fear and greed of the stock had a little bit of fear, but it was moving up into greed. Exactly what we want to see. Order blocks. Let's do, so RelX, April 15th. It was right-ish on this order block right here. This might have been a hard one for me to take. But then again, Steve followed his plan. It ran up exactly what Steve was saying, right? So what do we have? Like 8 out of 9? 8 out of 9. So Steve took this trade because he had 8 out of 9, the Outlier 9. He didn't even realize that the Outlier 9 existed at that time. So it ran up. And then, like he's talking about, that snapback, it got up from the entry point was at 46. And then it ran. And he's saying it snapped back the day he got out. So let's say the peak of it, the peak on price right here was on May 6th with the fear and greed spike at fear and greed at 86. And it's come up a little bit higher. And like I'm telling you right now, the higher up it goes, the more likely it is to snap. And that's exactly what Steve experienced there. So outstanding work, Steve. I'm so proud of you. You saw the Outlier 9. You took 8 out of 9, and we didn't even realize it. So that's great, dude. Way to go. If Rocket Lab goes up today, we still put the trade on at the end of the day? Probably. right? Probably. I'm not scared. Trend following means going with the trends. And sometimes you have to pay more for the stock. That's just part of the game. Okay. Let me see. I want to find some more questions here. My job on Friday mornings is to answer all of your questions. James, what trading level should I opt in for a super new sub? So if you're opening a new brokerage account, they're going to have different levels, especially if you want to trade options. My opinion, because this is what I do, just try to get the whole hog. Whatever their most advanced options is, go for that, because then you can always scale up into that, rather than if they say, okay, you can only do options level 1 out of 4. Well, then you're limited, right? I don't want anybody to limit me. I want to be able to do what I want to do. That's why I live in Texas. More freedoms, less taxes, okay? And when you get your brokerage account, you want more freedoms, and of course, you want to pay less taxes if you can. But if you pay more taxes, that means you're a badass like me, and you pay lots in taxes because you're making money, all right? So that's what I would say. Try and get the most you can, the widest open you can. Okay, bull market genius. This is a fantastic question. I really, really appreciate it. You're not gonna like my answer though. I'm curious as to what kind of returns I can expect buying options on a yearly average. Just getting into it. The first year, you can expect to lose money. The second year, you can expect to lose money. The third year, you can hopefully break even if you haven't blown out your account by then. The fourth year, you can hopefully plan to break even if you haven't blown out your account by then. The fifth year, you might pull a profit. I'm just being realistic here. It's not the answer you wanted, but I'm being very realistic. If you can survive the first 90 days of trading, you are in the top 10% of traders. Oh, wait, what? The stats are 90% of traders blow up 90% of their accounts the first 90 days of trading. Meaning, if you can just survive to day 91, you are better than 90% of traders out there. Isn't that crazy? It's just a fact. So my thought is, year one, if you can break even, oh my gosh, you are tremendously better off than most people. Year two, if you can break even, you are so far ahead of the curve, you have no idea. Year three, if you can pull a profit, so you're already, 2 years advanced. If you can pull a profit on year three, dude, seriously, that is awesome. So that's what I would say. Probably not what you want to hear, but it's the truth, right? And this is not I'm gonna tell you what you want to hear channel. I'm gonna tell you the truth. You mean I'm not going to make 200%? Yeah, that's a quote from New Trader, Rich Trader. I'm just gonna leave that down the rest of the day. That's a quote from New Trader, Rich Trader, where New Trader shows up at Rich Trader's house and he's like, oh, I got this all planned out, right? I'm going to come in, I'm going to make 200% my first year, and, I'm going to be retired by the end of the year, right? And Rich Trader's like, that's cute. That's funny. But it's never going to happen. But it's never going to happen. This is one of my top 5 favorite trading books. You need to get it. You need to get it. Let's see. The calculation for extrinsic value versus the ask price of the option. Okay, let's jump into options. I love options. They're my favorite. All right, so let's look at Rocket Lab. Since we were looking at this earlier, Rocket Lab, I was looking at the 20 strike right here. So extrinsic to intrinsic. So all options have extrinsic value. Not all options have intrinsic value. Intrinsic value is the moneyness. This is how worth your investment is becoming. Okay. So for example, if you bought a 26.5 call, notice it has absolutely zero intrinsic value. There is no intrinsic value. There is no moneyness. There is no worth to this. If expiration comes, this is worth nothing. Now that's a hard concept to understand. What I'm saying is, if the option date or the expiration date of May 23rd comes and goes, and the 26.5 strike is out of the money, meaning price is less than 26.5, your 61 cents that you paid for it per contract is gone. Every morsel of it. And this is why a lot of people screw up bad with options is because they think, oh, really? I could buy this for 61 cents? Awesome. Price moves up some. Maybe price moves up to the 25. Price moves up from 21 and a half to 25. Wait, what? Oh, man. I got nothing? But the price moved up $4. Nothing. You get absolutely nothing. Worthless. That is the intrinsic value that you did not get. What you paid for was extrinsic value. Extrinsic value, you can think of it as time value. They also filter in the market makers. They also filter in the volatility of the stock. So when volatility is high and when you're going out further out in time, you're going to pay a lot more extrinsic value. Extrinsic value goes to zero on every stock, on every option, on every strike, every time. So let me show you a couple examples, right? If we look at the 20 strike, in September, it has $3.45 of extrinsic value because that's way out in the future. Way out in the future. If we go to June, the 20 strike has $1.65. So it's half. You're paying half the extrinsic value just by closing in time. And if we go to May 16th, the 20 strike has 81 cents. So even half of that. So extrinsic value is your time and your volatility in your price. And it will always decay to zero. So how do you calculate intrinsic value? Intrinsic value is the price of the stock minus how deep it is in the money. So if we look at the 16s right here, let's say 2140, it's moving around a lot. So we're going to say 2140 minus 16. 2140 minus 16 is $5.40. And if we look over here, the intrinsic value is right around $5.40, right? Of course, price is changing a little bit because it's open. Amazing. And then it has 9 cents of extrinsic value. So this value right here will go to zero. And that's okay, as long as you're planning on that. So for me, I like to trade roughly the 80 delta. So if we go to 21 days out and we go to the 80 delta, which is right around, we'll just go for here for now, right around here for now. That's 46 cents, 45 cents of extrinsic value on $3.90 for the option price. So 46 divided by 390 means 11% of this will decay. If 11% of this will decay, I understand what I'm working against. But here's the deal. Most people have no idea. Most people buy their out of the money options where 100% of it is extrinsic value. And in this example, 11% is extrinsic value for me. So for the next 21 days, your option will decay 100% divided by 21. So we'll do this. 100 divided by 21, meaning your option will decay 5% per day. Your investment is going to go down 5% per day in extrinsic value. That's not fun, but that's what it is. Next, if mine is 11% divided by 21 days, mine is going to go down by half of a percent. So yours is going to have all of it decay. So it has to 100% decay to zero by 21 days out. So it's going to decay by 4.76% per day. Only 11% of mine is going to decay over time. Now, we can't get around this, right? If we could do zero decay, that would be great. But the nature of options do not allow this. Okay, so I know what you're thinking. Well, I don't want to pay any decay. Well, then buy the stock outright. Go ahead. Buy the stock outright. But if you want a leveraged investment like I'm talking about, you want to go deep in the money because you have to pay as little of this as you can. So it's only going to decay 52 basis points per day. That's a giant difference. Yours decays 10 times more than mine per day. And I don't want that. So that's just a little options deep dive right there. I love me some options. How could you lose money if you follow all the rules? Patrick, it doesn't sound like you've been trading very long, my dude. No offense, but this is why I have this slide right here. How could you lose money if you follow all the rules? on the whole, right, over a series of trades, hang on, where's my slide? Over a series of trades, you should be okay. But on each individual trade, we do not know the outcome. So let me also show you my 2024 results, and that'll help. If you follow all the rules, how could you lose money? Hold tight, just loading in. So these are my 2024 results. If you follow all the rules, how could you lose money? So 49 trades between May and November last year. 49 trades. I had a 91.37% return. Outstanding return. But you can see right here the distribution of wins to losses, right? I had one really big win. I had a couple decently sized win. I had quite a few small winners. I had lots around this break-even point. Lots of them around this break-even point. I had a decent amount of small losers, and then a couple losers that were a little bit bigger than I'd want. Okay? How could I lose money if I follow all the rules? Because I don't know the outcome. I don't know the outcome, right? We do not know the outcome of the trade before we get in. On the individual, we don't know the outcome of the trade. But when you have enough data like this, you can run, some analyses like we're doing right here, and we can say, okay, if my average win is 19%, but my average loss is 18%, some of these are pretty good. But if I ran a 50% win rate, I might not make all that much money. However, last year I had a 69% win rate, meaning I still lost 31% of the time. I still lost 31% of the time. And even though that these were close, the average win to average loss, because the win rate was so high, that's how I was able to generate giant returns. So it's a fantastic question, but it also shows that there's a lot more to the game than you would expect, right? You can follow all the rules and it's still going to lose. There are 4 types of trades: a good trade, a bad trade, a winning trade, a losing trade. A good trade is one where you followed your rules for entries and exits. A bad trade is where you didn't follow your rules. Now you decide these rules, right? Nobody's sitting on your shoulder saying, do this, do that. I'm trying my very best. I'm giving you the Outlier 9. I'm giving you all my entries, all my exits. I'm giving you my buys. I'm giving you my sells. I'm giving you everything that I can, but you can still lose money. Ed Sekoda, one of the market wizards, Ed Sekoda, has a quote that says, everyone gets what they want out of the market. Now, your first thought is, well, I want to make money. Do you? Right? If you want to know everything about the market, go to the beach. Push and pull your hands with the waves. Some are bigger waves and some are smaller waves. But if you try to push the wave out when it's coming in, it's never going to happen. The market's always right. Talking about trend following right there. But everybody gets out of the market what they want. Now, what does that mean? If you think about it this way, when we go to the market, we all go in with our subconscious biases. We may not know what they are, right? We may not know what they are. And in fact, I have lots of great reading material for you if you'd like to grab some. Any Tony Robbins book? Any Tony Robbins book is fantastic. I also really like the secret type books. I don't know where they are right now. But I'm telling you, the number one trading psychology book that you want is this one, Trading in the Zone. When you pick this up, one of the key things he talks about is you don't have to know what's going to happen in the markets to make money. And I remember walking through my neighborhood, listening to this on Audible, and thinking to myself, wait, what? What do you mean? What do you mean I don't have to know what's going to happen to make money? Because he's talking about on an individual trade, right? On an individual trade, we do not know the outcome of what the trade will be. We don't know how much we're going to make. We have a good idea of how much we are going to lose if we're wrong, but we don't know how much we're going to make. And on the individual trade, that's how you have to approach it. But in a series of trades, you should be able to determine your mathematical edge. So for example, my edge here is 7.69%, meaning that every trade I put on, I have an expectation that I will win 7.69% returns. That's your edge. And that, in fact, inside of Outlier, it'll tell you that too. It'll tell you your exact edge, right? So you got a performance summary. So you can see right here, Outlier, 86% versus buy and hold at 77%. And average holding period, 9 days. Time in the market, 58% of the time. Signal return, 86% versus 77. But what's cool about this is it shows your capital efficiency, meaning for every day that you're in the market, because you're not in it 100% of the time, you're only in it 58% of the time, your average returns per day is 1.91x versus what it would just be to buy and hold. That's your expectancy here, 1.91x compared to buy and hold. Pretty cool, right? Really cool to me. So going back to what everyone gets what they want out of the market. It doesn't mean that you can say, well, I want money. Give me money, market. That's what I want. When we enter with our subconscious biases, what can actually happen is you actually like being the center of attention in a negative way. I don't know you from Adam, so I'm not saying you in particular, but I'm saying if you like being the center of attention and you like getting sympathy from people, you will do the actions that cause you to be in a circumstance where you will still get sympathy from people, but instead of being injured, instead of having bad grades, you're going to be having bad trades. Everyone gets what they want out of the market. And I'm telling you, your psychology in the market is 90% of the game. It's 10% your buy and sell signals. It's 90% what's in between your ears. And it sounds crazy. But the way to get over this is, number one, to develop a plan. Your plan. Taking a look at what works for you, what doesn't work for you. Now, you might even be thinking, well, I've never traded before, Chris. I don't know what works for me. I get that. So where I would start is paper trading. Come up with the plan without risking any dollars whatsoever. Work your plan. Start making an exact plan of where you're going to get in and where you're going to get out. And then treat that paper trading account as if it were real money, because it's not real and you're going to feel different. But treat it as if it's the most serious thing in the entire world. After 6 months of this, if you've developed a plan to get in and get out, and you can reliably say, this is where I get in, this is where I get out in paper trading, then start with one share or one contract. Do not overdo it at this point. You're not ready. Start working the one contract, the one share, and get used to that feeling of getting in and getting out. And then go to 2, and then go to 5, and then go to 10, and then make sure you're position sizing correctly at that point, because you should have plenty of money. And then work your plan and adjust as needed. Okay. So that is how you overcome these biases, because you no longer have to worry about what am I going to do, because you've been through all these different scenarios in the several months you've been trading. Win or lose, you've come up with different ideas, different things that'll work for you, because it won't work for me. It'll work for you. That's what I try to preach every day. Do what works for you, not for me. And then you should have a plan that you can execute. But the real problem becomes actually following through on that plan. And I see lots of comments about that, right? You can come up with the greatest plan in the world, but when you have pressure coming against you, when the stock is moving down, what are you going to do? Are you going to freeze? Are you going to get scared? Are you going to panic sell? Or are you going to follow your plan? You know exactly where you're going to get out, because you've already written this down. Right? There's the old adage of everybody has a plan until they get punched in the face, right? Or get punched in the mouth. And it's so true. Until you've been punched in the mouth enough times, like I've done. I've been punched in the mouth so many times I shouldn't have any teeth left when it comes to stock trading. But because of that, I have learned exactly what not to do. And that, going back to what I said earlier, year one, if you can break even, you are so far ahead of everybody else. These are the things that you need to talk about. And yeah, a lot of trading has a lot to do with psychology. And it's crazy. It's crazy. So listen, if you're ready to save time, make money, and start winning with less risk, you got to check this out.
Are you ready? Let's go!
Respect is earned. Respect is never given.
That's right. Starting next week on Tuesdays and Thursdays, we are having Outlier University, where we are going to showcase everything that I've ever learned in trading all at once. right? I love these AMAs. I love to trade. I love to teach how to trade, but we're going to go step by step by step, and I'm going to teach you everything. And the great part about it, it's free. Some people charge $84,000 a year for what I'm going to give you free here on YouTube. So next Tuesday and next Thursday in the afternoons, I have a group of 9 gentlemen who will be able to join us live, and then replays will be available for everyone to watch. And if you're here watching live as well, we're going to have a 10-15 minute Q&A session at the end so that you can ask questions and I can help you out as well. So if that sounds great, be sure you subscribe. So we'll take this one last question here. I think it's a great question. Where did it go? Hang on. It was a theta question. How come you do not include theta in your option considerations? So let's go back to the options chain real quick. Theta is the time value. Theta is what we talked about earlier in your extrinsic value. I totally take that into account. Faux show. No doubt, hands down whatsoever. I do take theta, the extrinsic value decay, into my considerations. Now, it sounds like you've come from the world of selling options. I also came from the world of selling options. I also lost over $200,000 selling options. I would never, in the history of time, tell anybody to sell options to collect the theta. It is a loser's game, hands down, no matter what. You are not going to win the game selling options. The old adage is selling options is picking up nickels in front of a steamroller. Because yeah, you're going to be collecting some here and there. But one trade that doesn't work for you will take you 8, 10, 12 trades to make back. One losing trade takes you 8, 10, 12 trades in a row, perfectly executed to make back. Whereas mine's the opposite. I can be 8, 10, 12 trades wrong and make it all back in one. And I don't have to stress about it. So for that question, theta decay. That's why when I talk about trading, I talk about how we want to minimize the amount that we pay. And so for me, I want to take 20% or less extrinsic value. That's why I had that little calculation earlier. 20% or less extrinsic value. Because it does go down. And we cannot avoid that if we're buying options. But we want to put the momentum in our favor. We want to make sure that we have everything in place to help us be on the right side of the trends. And that is through the Outlier 9. So if you're ready to save time, make money, and start winning with less risk, click one of these 2 videos. It's going to do exactly that for you. And have a fantastic day. I'll see you this afternoon.